Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The core pattern that has drove this market since mid-July has been the July to November ascending triangle, currently 22,815 to 25,195. I've once again highlighted the pattern in blue on my daily chart. Whilst this looks like a good pattern, it has, for example, had the requisite number of touches on each side that is necessary. It still had some imperfections. Both the lower trend line and the flat overhead trend line had been breached, the lower trend line especially. However, the breaches were repaired and in the end it was a good pattern. It's noteworthy to mention that the overhead flat trend line is the August 2011 high, and it had also been reinforced by the nearby long moving average, currently 25,580. Last week I said, and it was true at the time, and I quote, "It is too early to give targets either above or below as we have not had any proper breaks of the sideways triangle. But I can give an idea of the size of the break once they are confirmed to have occurred." Thus, a confirmed break higher of the pattern would see a primary target $4,875 over the confirmed break level, and a harder to achieve secondary target $6,965 over the same break level. End of quote. This was timely information as the previous week, that is 2 weeks ago, we had a weekly key reversal up, something that we did not see in any of the other metals. I added at the time that, and I quote, "This is worth noting as it may lead to the flat upper trend line and the long moving average soon being tested, but we shall see." End of quote. Well, we waited only until midweek when the market made a bullish opening white Mariposa that saw Thursday's action punch up through both the upper flat trend line and the long moving average. The market subsequently ran up to the May 2011 high at 27,330, where it hesitated before making a further move higher this past Monday, with an unusual bullish engulfing pattern that made a high not seen since early May and a close not seen since early June. So we've had a genuine break high from the ascending triangle pattern. How did that fit in with the size of the move mentioned earlier? Well, those sizes of move would have given a primary target in the 30,070 area and a secondary harder to reach target X in the 32,160 area. The primary target has already been achieved, but the secondary target X is still live and, as I say, is in the 32,160 area. There's one final thing I wish to mention, and it is also an omission on my part, because I could not see it properly last time, but we had another bullish factor late 2 weeks ago. It was a bullish bow tie formation of the short moving average, currently at 25,580, the short medium moving average, currently 23,095, and the medium moving average, currently 22,575. They all crossed over 2 Fridays ago. Now, bow tie formations have two elements. First is that the market moves in the direction of the exiting moving averages from the bow tie crossover. In this case it was upward, and that proved to be the case. The second is that between 15 to 20 sessions after the crossover, in this case this would be between the 25th of November and the 2nd of December, we ought to see the beginnings of the next major move, and it is usually in the direction of the moving averages, or upwards as well. Thus, I would ask you to look out between those dates especially to gauge what is happening. LME 3-month zinc. There is still an awful lot of stuff going on here all at the same time. But I'm hoping some will be retired by next time. So, much earlier we had a breakdown below from the March 2020 to June 2022 ascending expanding wedge pattern, currently 38.49 to way off the top of my daily chart. This pattern is highlighted in dark blue. There are some outlandish potential targets below for such a long dated and wide pattern, so to keep an element of realism here, I've suggested looking at just the possible primary target X for such a move in the 25.45 zone, and that's below. The next one is an even longer pattern, but one that has been impacting the market over the last 3 weeks. It is the 2015 to 2020 bullish Andrews pitchfork. That's highlighted in red on the daily chart. Specifically the lower time, currently at 28.03. This pattern has shown the bullish angle attack for years and was being tested on the downside for the first time over the last few weeks. The third pattern is a more recent one, and as of late last week, a failed pattern, and that will be retired, though it showed a good indication of the bearish angle of attack between mid-August to mid-November. It is a late May to mid-August bearish Andrews picture, which is highlighted in green. The specific impact has been upon the upper time, currently at 28.15. As I've already mentioned, this pattern has been broken. It will be retired after this commentary. It will be replaced by the shallower bearish shift pitchfork for the same move, which is highlighted in purple. Currently the market is just above the middle time of that, and that's currently at 30.73. In fact, I said it was likely to replace the bullish Andrews with the shift last week, so it's nothing new. So where are we now? Well, we have moved up over the short medium moving average, currently 29.98, as well as testing the next moving average above the medium moving average, currently at 31.22. There are two congestion bands overhead beyond these. The 3200 to 3220 area, containing the June 2018 high at 3220, and the 3302 to 3329 area, containing the 50% Fibonacci line of the March 2020 to March 2022 move at 3329. This doesn't take us away from where we truly are. It really doesn't. We really are in between two long-term patterns. A bearish pressure from a break below the March 20 to June 2022 ascending expanding wedge pattern, and the more recent but longer term 2015 to 2020 bullish Andrews pitchfork that's pushing higher. Maybe we should just accept where we are and deal with it accordingly, at least until something else turns up. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.